Hello and welcome to a brand new show of Market Makers. Just when global market watchers were able to negotiate the problems in Greece very smartly, there is now fresh or renewed concerns which have surfaced up in China. Growth, devaluation of the Chinese currency, and risk of deflation in global economy. How does that tie in for a market like India? Earnings season is almost over, and what are the key takeaways from that? To discuss all that and much more, I have a very special guest on this edition of Market Makers, an old India hand, someone who has nearly 2 decades of market experience. Dhawal Mehta of Somerset Capital. Dhawal, fantastic to have you back on ET Now. Thank you for joining us. We are connecting with you in your new avatar, so glad to have you back.
Thanks, Nikunj. Good to see you too.
Let's start with the moot point, and the moot point is China and only China. What's going on there, and how will that have an impact on a market like India? Because India and China, historically, they've always moved together.
Well, this is certainly a shock, for the markets in terms of the way it happened, and obviously we've seen, the currency kind of, devalue by 4 to 5% over the last couple of days, and so that has obviously had an impact on the region and also elsewhere. And as I see it, you will have to just wait and watch in terms of, what happens next. And so in that sense, markets will, to my mind, remain nervous for some time at least, and just to kind of see where this leads up to. So in that sense, yes, it's going to be a bit nervous. It's going to be a wait and watch kind of approach for some time at least.
Are fears of currency war stroke global deflation real?
Well, it's difficult to argue against that in some sense. I mean, if you look at the fact that most emerging market currencies have taken a knock, this year the US dollar has come back strongly against just about everything else, and so there is some credence to that kind of belief, and so there is obviously therefore fears whether we are heading back to the days where emerging markets took a big hit because of currency related issues. But I think, having said that, obviously, we'll really have to, kind of be in a wait and watch mode for some time before we really take a call on that. But I can understand why markets are, so concerned at this point of time.
As a firm, you are GEM specialist, and within the aggregate money you manage, India is one of your key positions. What makes you bullish on India? The critics would argue that India is a crowded market, a discovered trade, and an expensive market to own.
All of that is true, and so I wouldn't argue against any of those points in general. But then again, India's always been a stock pickers market. There are always opportunities out there, and at a macro level, I think there are reasons to be reasonably positive on India. I think we are seeing the economy actually come off the lows that we've seen over the last 2 or 3 years. Things have been pretty down and out, as we all know, and we are just about beginning to kind of get up from there. The fact that the commodities are where they are is a big positive for India. We all know the impact of low oil prices on India's economy. The rupee has been fairly stable, and we are seeing growth come back, although it's been very gradual and it's been in very select pockets. But I think there is reason to think that India as an economy will recover in the medium term. To my mind, the Modi government has all the right intentions and have wanted to do all the right things for the economy and for business. You might think that the pace of progress has probably not been to your liking, but I don't think anybody can fault them for not wanting to do the right thing. So in that sense, there is reason to believe that they will carry forward, that process. So you have macro support, you have a government that is at least thinking on the right lines, and you have a market and where bottom-up stock picking has worked, and this is as good a time to do that. So I wouldn't be overly concerned about India. Yes, there are some pockets of the market which are expensive. And so you want to be careful there, and there are some sectors that are in distress, and so you want to be obviously careful there as well. But then again, it's a huge market. There is reasonable amount of depth there, and there are reasonable opportunities in my view.
What do you make of the earning? The earning season so far has been disappointing. Top line is sluggish, margin expansion little bit here, little bit there, but on an aggregate basis, the quality of earning, big question mark. So for Indian stocks to trade at a premium, they need some earnings support, and which honestly has been missing.
True, I would broadly agree with that point, in that the earnings season has been pretty soft. It is a tough environment, and I would think therefore that given the kind of environment that we are in, I would not categorically say that the earnings season has been a disaster. I think we again have seen pockets where you've seen a fair amount of resilience. The fact that commodity prices have been soft has helped a lot of companies in a lot of sectors. I would agree with you that the top line in general has been soft. Demand conditions are still very poor, and so that is an area of concern. But in terms of what corporates have done to kind of salvage, a fairly tough environment, to my mind, has been fairly impressive. The commodity price, the fact that commodity prices are down has obviously helped. So I would say again, it's tough. But given where expectations are, I wouldn't go so far as to say that earnings season have been a huge disappointment. I think there are, again, like I said, on a purely bottom-up basis, there are areas and there are sectors that have done well.
In markets, more than relative performance, we also have to look at absolute performance.
Sure.
So where does India stand when you compare India's absolute performance with other emerging markets? And the reason why I'm asking you this question is because as a firm, you are an emerging market specialist. You have the liberty to look at other markets also when they offer value and opportunity.
Sure. No, absolutely. That's a fair point. And if you look at Indian market as well, Nikunj, you'll find that the markets this year, for example, have been flat. So in that sense, in an aggregate sense, I know we had a very good run last year, but if you look at this year to date, we haven't done a lot. I mean, I think people tend to forget that, but the Nifty year to date is pretty much flat. So yes, as an emerging market player, we do have options to look at other markets, and we do that all the time as as a matter of course. And so there's always a search for better stocks and better valuations, and so we are doing that. So in that sense, India is competing with other emerging markets as far as our portfolios are concerned. And and yes, India in general is an expensive market. It has almost always traded at a premium to GEM. And so to that extent, I would agree with you that the valuations are an issue in India, and it's getting more and more difficult to find the right quality of stocks at the right price. But this is again not to say that therefore there are no opportunities or there are no areas where you can find such opportunities. So I would go back to my earlier point and say that as long as you're kind of willing to go out there and look for the right ideas and the right stocks and the right companies, I think there's still a lot of juice out there.
Let's talk about your basic investment approach. And your investment approach is pretty much centered around quality stocks. And one quality end of the market which you've liked historically also is the private banking space. Mm-hmm. What's your view there? Do you think private banks have a long way to go?
I would think so, because I've always maintained this, and in private sector banks have been a long time favorite of mine, and I've always said this, that private sector banks in India are not just interest rate cyclicals. They are more a play on the Indian consumer, and they're proxies to the overall domestic consumption story. And if there are banks and managements that do the business well in terms of the basics, then I think that this is a great way to play the India secular growth story. And I think it's played out across a number of names. We all know the big private sector banks. They've kind of participated in that secular growth. The fact is that for a lot of financial services, India still remains a hugely underpenetrated market. So there is business out there. There is opportunity in terms of just building out the business. And I think you've seen that happen over the last few 5 or 7 or 10 years. And to my mind, that can continue going forward as well. I maintain that, these are great proxies for the India story.
But the price difference between PSU banks and private banks is at a historic high. If your view is that Indian economy will make a comeback and is in the cusp of recovery, some would argue that private banks would benefit disproportionately. After all, PSU banks have really 60% of the total exposure of the economy.
Sure. Well, that's a good point, Nikunj, but the way we see it is not in terms of just it being a tactical kind of asset allocation. So we are not really talking about churning the portfolio or it being a trading idea. For us, it's about finding the right business and being partners in that business for the long term. So purely from a tactical point of view, what you're saying might probably make sense to a few people. But we don't look at it that way. I mean, we are not trying to second guess which is the next best performing sector over the next couple of quarters or the next 4 or 6 quarters. We are really looking at this as a long-term kind of market, a long-term investment destination. We are trying to find businesses that will do well over the long term that currently actually might not be doing too well or for whatever reason, but are good long-term plays. So the way we see it is that we think that private sector banks are a classical buy and hold, are a classical way to play the long-term India story without really getting into a tactical kind of strategy or a tactical kind of decision making.
The other favorite buy and hold group, or I like to say the Warren Buffett group in India, has been the pharma space. But the regime is changing. US FDA is stringent. Number of USD approvals are at a multi-year low, and there is huge price erosion in the US generic market. When India's biggest pharma company is sending negative feelers, I honestly worry about what is going to happen to that sector in the medium term.
Well, Nikunj, as I see it, the basic argument for generics, hasn't changed in my view. The fact is that the world is increasingly favoring generics as a means to control healthcare cost. I don't think that there is any fundamental change in that. I agree that the FDA has slowed down on product approvals, but as I see it, this is momentary. You cannot have a situation where this goes on on an indefinite basis. So as I see it, this is again a phase where the industry will have to contend with this particular fact, and so it is a tough time in that sense. But I don't think that really changes the basic fundamentals of the business. The fact is that Indian companies over the last, everybody knows that some of the large Indian companies have built a meaningfully sized US-based business. On the pricing erosion bit, again, I agree with you. We've seen price erosion in a lot of products. But there again, that's again the nature of the beast. The fact is that as a pharma company, you need to continuously innovate. You need to come up with new products. You need to get into more complex, generics. You need to get into more and more specialized products. And the good companies and the companies that realize that will do it, and that have the capability to do it will do it. So you will always have to pick and choose in terms of which companies you want to invest in. But I don't see this as structurally changing the business or kind of changing things on a very permanent basis.
Just to put some numbers right for our viewers, Indian pharma companies only have 10% market share of the US generic market, which stands north of $110 billion. So the scope of the pie, I guess, is very large, and that is what Dhawal is trying to indicate. Dhawal, I'm going to shift sectors and cut across from pharma to IT. Is it time to reboot and reset expectations or growth expectations for the IT sector?
I mean, yes and no. The fact is that IT companies historically have had very high growth. We've seen those numbers come off. Obviously, the base is getting larger, and so to my mind, you obviously just purely in that terms, you have to tone down your expectations in terms of growth. But there again, and I know that there is a lot of debate on this, and there's a lot of talk on this, when you talk to analysts. But as I see it, I don't think that there is a fundamental change in the thesis and in the business model of these companies. Yes, the industry is going through a fair amount of transition where where companies, IT companies will have to, well, I don't know whether reboot is the right word, but will have to kind of evolve, and in terms of their product offering, they have to move from a conventional, bread and butter kind of business to now, getting to a stage where they need to get it into the business decisions of their customers. So yes, in that sense, there is a change. But then again, change is change has been the only constant as far as that business goes. And again, it's a matter of being in the right company, and a company that knows and kind of understands what is happening within the space and is doing something to tackle that and to kind of counter that. So again. I'm not in the camp which says that IT services is kind of it's kind of a commoditized business. It is commoditized to a certain extent, but there again, it will basically boil down to companies that kind of do the right things.
What do you like from the dirty picture? And when I say dirty picture, industrials, cyclicals, because if the economy recovers, operating leverage and financial leverage will kick in for some of these companies.
Again, Nikunj, the way kind of we look at markets and the way we look at India is that we are not really taking a sectoral view, and we are not really, doing any kind of top-down analysis. So it's not about, saying that okay, let's look into construction or into asset owners or anything like that. So we are really actually trying to look at individual names. And so I don't really have a view for you in terms of whether we ought to look at a particular subsector within that space. But having said that, obviously we are always, I know it's been a neglected part of the market for a very long time. And so in that sense, so we are obviously keeping a close eye on some of the names that potentially we want to look at. And so in that sense, we are kind of, doing our work on some of those names, but I don't really have any favorite in terms of whether there is a particular subsector or sector that we are looking at in any kind of favorable manner.
So the core of your portfolio is still centered around IT, pharma, and private banks?
I would think so, yes. I mean, again, like I said, Nikunj, it's not a top-down view in any sense of the word. So we are not kind of saying, okay, we like pharma, and so we're going to kind of have X% in pharma or Y% in private sector banks. It all boils down to what are the individual names that we like at any point of time, whether the valuation, supports the business, and whether we want to really kind of hold it for the long term. So I think those are critical issues for us. So we are, kind of doing a stress test, especially given how tough the environment is in terms of, so a stress test in terms of the business, in terms of the valuation, in terms of the corporate governance, and also in terms of the the balance sheet strength. So we're kind of sticking to our process that we have across emerging markets. We are hopefully being diligent enough to make sure that we don't make any large mistakes, and kind of stick to our way of doing things.
Dhawal, as a veteran fund manager, you would note the importance of buying fear, and big money is always made when you sell greed, when you buy fear, and there is outright fear in commodities. Is there merit in buying commodities? More like a brave call, more like a contra call, but is it a logical call?
That's a tough one. But it's really difficult to say, because it's again boils down to obviously a lot of macro questions on which probably a lot of people don't have answers at this point of time. So it is a very large macro issue in terms of what happens in China and so on. because that's really linked to what happens to commodities. So I really am not in a position to comment on that. It's a very big call. But yeah, I mean, like everybody else, we are obviously watching that space and seeing whether we can come with some opportunities. But it's really tough to say whether commodities will kind of languish where they are, or will go down further, or is this the bottom?
But according to you, China, again, I'm being repetitive with this one because that is the flavor of the moment. China is a block on the road. It does not mean end of the road for India.
I wouldn't say so. I mean, I know people tend to kind of link China and India, all the time, and just because of the size, or probably because of being the same, region. But I'm not a big fan of, kind of clubbing, them together and saying China or India, in whatever sense. I think these are two, very separate economies, very separate drivers. So I'm not sure whether people really kind of look at it in terms of China or India. I mean, I don't think that there is, to my mind, there is not as much of a comparison as people would tend to believe.
So if I have to summarize today's interaction, your view is that India is still a long haul story, and this is a market where you are likely to remain overweight, or this will be one of your key positions.
Well, yeah, I mean, India is a market where you need to be long term, where where the long term performance has always been a lot more predictable. And like I said, it's been a great stock pickers market. So you have to just go out there and look for the right businesses, right price, and then stay the course. So in that sense, it's a market that we do like. So yeah, there is no reason to kind of change that, at least at this point of time.
If a client calls you up after this interview and his question is, look, I'm impressed with your India view, I like the way you manage money, but I want some indication on what should be return expectations from Indian stocks on a 3 to 5 year basis, how would you answer that query?
I think a safe number to play with is probably 12 to 15% in annual terms. I would think that that's where you can basically get companies that can give you that kind of return in terms of earnings, and so that's probably a simple answer to that question in terms of what one ought to expect. But I would think that's something which should come through, in my view, over the medium term. It may not happen in a nice, secular annual kind of way, and so in that sense, you'll have to be patient. But my sense is that long-term returns in India have actually been higher than that. And as I see it, the basic earnings model or the earnings growth model in India hasn't changed. It's obviously gotten impacted over the last couple of years because of whatever has happened at the macro level. But then again, if you are in the right sectors and in the right kind of companies, then I think that's a fair expectation.
Well, fantastic to have you back on ET Now. Thank you for your solid advice and wonderful insights.
Thank you so much, Nikunj. Nice talking to you.
That was Dhawal Mehta of Somerset Capital, an emerging market specialist and an India specialist also. Thanks for tuning in, and thank you for watching this edition of Market Makers.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.